At the start of the year, Lateline Business asked 5 experts to look into their crystal balls and predict how key elements of the economy would perform in 2011. Well, we're halfway now and the end of the financial year is looming, so we've gone back to our experts to see how they're faring. Tonight, we look at their predictions for the stock market, which has had a miserable 6 months and is heading for a 7.8% loss for the quarter.
We're still comfortable with that forecast. A lot's happened over the past 6 months and a lot could happen in the next 6 months. The market's been through waves of optimism and pessimism so far this year. Right now we're at the bottom of a cycle of pessimism. And when we look at the fundamentals, we didn't think the Australian market was fundamentally overvalued at the beginning of the year, and we were looking for earnings growth across corporate Australia of around about 10% this year. We still think that's a likely outcome, and that's consistent with the market ending the year at just over 5,000.
Obviously, we had the setbacks at the start of this year, both domestically with cyclones and floods, internationally with earthquakes and also volcanoes with long names and even longer tails. That set the world economy back. We've also had a little bit of a dip in confidence out of the US and the numbers coming out of there. And the Greek debt situation in Europe generally has reared its ugly head again. All of that has affected international and local confidence, and that's holding the market back. But that said, on a PE and dividend yield basis, the market looks like it's excellent value, and we'll be looking for about a 10% rise over the rest of this year, leading the market to probably break the 5,000 barrier by the end of the year.
You'd have to say that the balance of risks of that forecast are to the downside where the market is today. We do think by the end of this year the RBA will be getting towards the top of its tightening cycle. The upward trend in the Aussie dollar probably would have run its course, but to get up there you'd have to see a major uptick in earnings expectations, and given where things are at now, we probably think that is a lower probability than we thought at the start of the year. So overall we still think the market will trend towards 5,000 by the end of the year, but I think it will struggle to break through that unless we get that big upswing in earnings.
We continue to have a positive outlook for the Australian share market, but less so than what we did at the start of this year. We now think the Australian share market might end the year closer to the 4,800 mark. There have been a number of negatives that have emerged in recent months, and these negatives in the global economy mean that there's a less favourable global backdrop for equities. They include the increasing worries about the Greek debt crisis and what it means for Europe, and also the loss of momentum in the US economy. Bringing it back to home, the Australian share market should still continue to get support from a pickup expected in economic activity as we move through this year.
I'm expecting the US will have more positive news or less of the negative news in the second half. I don't think Europe matters that much, and commodity prices have been holding up, which is a pretty good indicator really of the overall state of the world. So at present, yields in Australia and the US are pretty attractive, so I think we could quite easily see a significant move back up. So back in that sort of direction where I was forecasting.
There you have it.